Hey folks, welcome back to the channel. Today, we're diving into something that's got everyone talking, the Great Unwind. We're talking about the global market taking a nosedive, investors losing their minds and their money, and the economy doing its best impression of a roller coaster on fire. So, grab your crash helmets and a stiff drink, because we're about to unpack this financial fiasco. We'll explore the causes, the consequences, and whether we should all be building bunkers in our backyards. Spoiler alert, the answer might surprise you. So, the global markets recently decided to throw a tantrum, wiping out a casual $6.5 trillion. That's trillion, with a T. To put that in perspective, you could buy every single person on Earth a large pizza with that kind of money. The Dow Jones Industrial Average, that bastion of American capitalism, took a nosedive, dropping over 1,000 points. It was like watching a prize fighter get knocked out in the first round. The financial world was left stunned, clutching their metaphorical pearls and wondering what the hell just happened. You see, they were grappling with a delightful cocktail of financial and geopolitical concerns. We're talking war, inflation, rising unemployment, and the looming threat of recession. From reckless government spending to corporate greed, it seems everyone had a hand in this economic shit show. And now, we, the innocent bystanders, are left to pick up the pieces. By the end of trading on Tuesday, things seemed to chill out a bit. With the Dow Jones bouncing back about 300 points, it was like watching a boxer stagger to their feet after a particularly nasty blow. But don't get too comfy, folks. This market is about as predictable as a toddler on a sugar rush. August is notorious for market volatility, especially with traders on vacation, presumably sipping margaritas on some tropical beach while their portfolios burst into flames. Talk about global market drama. So, what does this all mean for you, the average investor? Well, it means buckle up, Buttercup, because we're in for a bumpy ride. The market is jittery, investors are spooked, and the experts are throwing around words like correction and bear market like they're going out of style. Now let's talk about the warning signs, shall we? Because, like a canary in a coal mine, there were a few red flags flapping around before the market decided to take a swan dive into a pool of despair. First up, we have Warren Buffett, the Oracle of Omaha, the man who makes money while he sleeps, decided to halve his Apple shares and sell more of his Bank of America shares. That's like your grandma selling her prize cookie recipe. You know something's up. Then there's the global financial system itself, which, let's be honest, has always been a bit of a house of cards held together by duct tape and wishful thinking. It relies on cheap foreign money and strong domestic companies, both of which are currently as rare as a sober politician at a lobbyist's cocktail party. So, with all these warning signs flashing like a disco ball in a blackout, why were we all so surprised when the market crashed? Well, as the old saying goes, denial is not just a river in Egypt. The market hit was about as subtle as a sledgehammer to the face. We're talking over $1 trillion wiped out from the top 7 US companies. Apple alone lost more money than the GDP of some small countries. And it wasn't just the big boys who felt the pain. Even cryptocurrencies, those digital darlings of the investment world, took a hit as investors ran away from riskier assets like they were infested with fleas. Bitcoin, Ethereum, Dogecoin, you name it, it probably lost a significant chunk of its value. So, what does this all mean for the average Joe and Jane trying to navigate this financial hellscape? Well, it means buckle up, because the ride is about to get a whole lot bumpier. So, what's next for the market? Honestly, your guess is as good as mine. Trying to predict the stock market is like trying to herd cats. It's chaotic, unpredictable, and likely to leave you with a few scratches. The recent bounce back was more about panic selling subsiding than actual recovery. High-profile sell-offs, like our buddy Warren Buffett ditching his Apple shares, are still big red flags. And to make matters worse, the Federal Reserve's decision to keep interest rates high, along with Japan raising its rates, has everyone on edge. So, what's the takeaway from all this financial mayhem? Well, it's simple. Hold on to your hats, folks, because the Great Unwind is far from over. That's it for today's deep dive into the Great Unwind. If you enjoyed this video, don't forget to like, subscribe, and hit that notification bell. Stay tuned for more updates. And remember, keep your investments smart and your humor even smarter. See you next time.